Monday morning. Welcome to another episode of Connect, the California MBA's weekly podcast featuring one-on-one interviews with movers and shakers in the mortgage and real estate finance industry. Today, we've got a great guest. We've got Jeff Burns with Walker Dunlop, who's also chair of the California MBA. We've got him here to talk about what's going on in his side of the business and what's happened at the California MBA the last year, sort of looking back on his year as chair. So I'm really excited to get into the weeds with Jeff and have that conversation. But before we start, I want to thank our sponsors at Accelerate. So if you're interested in better borrower engagement and closing more loans, which I think everyone is these days, check out Accelerate. They help lenders close more loans through better borrower engagement as the mortgage industry's most innovative marketing and sales engagement platform. The Accelerate CRM helps lenders manage workflow, contact strategies, lead management, referral, and realtor partners and reporting. Accelerate's engagement platform automates multi-channel marketing through social media, email, direct mail, text messages, ringless voicemail, and phone calls, which covers just about everything. It's all pre-built with the strategies and content to enable a better borrower engagement. And better yet, Accelerate integrates with the software that's already powering your business and will into the future. And in addition, the platform is SOC 2 and SSAE 18 certified to satisfy even the most closely regulated businesses, including those banks with mortgage subsidiaries. So for more information or to see a demo, visit accelerate.com, or you can contact the company at the number below in the description. And I'll just add that we spoke just a few weeks ago with Josh Friend, the CEO at Accelerate. And so you can go back in our archive and check out that conversation with Jeff with Josh, I should say, about what's going on at Accelerate, how their business is helping lenders, and sort of his thoughts on the industry right now. Before we get started with the conversation here with Jeff this morning, I want to take a moment. We've got a big update on an important piece of legislation that we've been tracking here in California. So I'll toss it over to Susan Milazzo, the California MBA CEO, for a quick update on that bill.
Hi, this is Susan with the California MBA, here with your weekly video update. This week, I'd like to talk with you about SB 939 that relates to commercial tenancies in California. The measure provides for a moratorium on evictions during the COVID-19 shutdown. Of course, it's designed to help small business owners that are experiencing revenue loss at this time. The measure, however, abrogates contract law to benefit one business at the expense of another. Of course, the loss in rent would also force many into foreclosure at the end of the pandemic. Further, the bill does not take into account the fact that we don't know how long the commercial eviction time period would last because it's related to some sort of an executive order related to the COVID-19, but we don't know how long. We might even have a low level of an executive order in place in our state. So the length of time is certainly an issue with this bill. Further, it doesn't take into account that the governor's executive order allowing municipalities to impose their own eviction moratoriums, as well as our state's judicial council's recent decision to halt all unlawful detainer actions in our court. So a short-term solution or that would definitely result in long-term negative impact to the commercial real estate finance industry and our state's economy. So we're asking for your help in opposing this measure. It's moving quickly through our state Senate, and the time is now for you to act. You can do this quickly and easily by using the Mortgage Action Alliance, a free grassroots advocacy platform that's offered to us through the National MBA. You can sign up for MAW. If you're already a member, you've received some messages. We ask that you take action and also forward that message to your colleagues in the industry, encouraging them to do the same. It's pretty easy. You get an opportunity to communicate directly with your representative and share what the concerns are for our industry and how it could be a negative impact to our state's economy overall. So we look forward to giving you updates on this and other legislative measures that are going through the state of California, and we urge your help to defeat SB 939. That's it for this week, and we'll see you next time.
All right, well, thanks for that update, Susan. And if you've got more questions about that important piece of legislation or any of the legislation we're following, make sure to go to the California MBA website, cmba.com, and click on the advocacy tab to follow all the legislation that we're tracking on a daily basis. So with that, I want to thank and welcome our guest for this week's episode of Connect, Jeff Burns. Jeff is the Senior Managing Director at Walker Dunlop's Walnut Creek offices here in the Bay Area in California. And Jeff's also actually just finishing up his tenure as California MBA Chairman. So I've got a lot of good questions for Jeff about the industry and his time as California MBA Chairman. So I'm going to jump right in here to the questions and kick us off here. So Jeff, why don't you start by telling us about your journey? I'm curious, how did you get started in the business and sort of what led you to where you're at now at Walker Dunlop?
Yeah, thanks, Dustin. Yeah, actually, my dad was in the commercial, and still is in the commercial real estate business, and funny, growing up, I really didn't have much interest in commercial real estate. I wanted to go to law school and become a lawyer, and let's just say maybe my grades in the early days of college wasn't lending itself to a law degree. So I became a poli-sci major, and then out of college I got a job for a large regional brokerage firm up in Portland called Norris Beggs and Simpson, where I did office and industrial leasing, and did that for about 3.5 years. That's, as those that do that business know, that's a really tough dog eat dog business. So I learned a lot, but left 3.5 years later pretty broke, and got a job for a bank up in Portland doing single family mortgage lending. And did that for about 3 years before I moved to the Bay Area to get my MBA at University of San Francisco, and then worked for a bit at Citibank and Bank of the West in the commercial real estate lending side. And then in 2004, moved over to what was then called Berkshire Mortgage, which was a Fannie Mae, Freddie Mac multifamily lender. And I've been on that side of the business ever since that time, and just love it.
Interesting. So you made that leap then from the residential single family side over to the commercial side. What was the cost for that?
Well, when I was coming out of grad school, I was trying to figure out what avenue I wanted to kind of go to, and I had the commercial real estate background on the leasing and sales side, and then I had the single family lending side. And so one of my classmates worked at Citibank in the commercial real estate lending side, and I thought, well, maybe that's a good marriage between those two things. And I was able to get an internship there for the summer in between my 2 years, and really enjoyed it.
Interesting. Okay.
Yep.
Well, let's fast forward to the future here, or to the present. What's your take on sort of the state of the industry right now, from what you're seeing and what you're hearing from clients and customers? And I mean, where is there sort of a best worst issue right now with market sectors or products? Where do we stand?
Yeah, it's obviously, these are incredibly crazy times we're living through right now, and certainly commercial real estate has definitely been impacted, but different sectors have been impacted very differently, and some worse than others. So far, multifamily's held up pretty well. We've seen very few requests for loan forbearance, and our clients are reporting that they're collecting the vast majority of their rents due from tenants. So I think that the CARES Act and specifically the piece that has added $600 to the state unemployment insurance fund, you're now getting, if you're in unemployment, you're getting about $1,000 a week, and so people are paying their rent. It'll be interesting to see if there's no new legislation to extend that, what happens in August. But for right now, people are paying their rents. Now, the office hasn't been impacted yet because mostly those are long-term leases. Industrial's holding up really well because you've seen e-commerce really spike over the last few months. But I would say, retail and hospitality have been, hit particularly hard. Obviously, like, malls and department stores, you're going to see, I think, quite a few bankruptcies emerge there. Hospitality, particularly luxury brands, are really struggling right now. So we'll see where things shake out. But on the capital market side, banks have pulled back lending a little bit, and securitized lending is slowly sputtering back to life. But Fannie and Freddie are still actively lending on apartments.
Okay. Okay. So looking forward, then what do you see the recovery taking shape? I mean, everyone's asking this question lately. What shape do you see the recovery? Is it a W or a U or a O or something? What's your take on, at least at this point, what the recovery is going to look like?
Well, I mean, I still think that obviously we know the front end of the shape is almost a straight line. What we come out the other side looking like, I think, is really going to depend on the development of either a vaccine or a reliable treatment for COVID-19. And I think until those things happen, it's going to, and then I think the other real issue is as we start to open up, are we going to see? We're going to see some pockets of reemergence of the virus, but is it going to be widespread or is it going to be very localized? And I think if it's widespread and it causes a lot of places to re-lock down, every month that these lockdowns continue, it's a multiple of that on the back end in terms of being able to come out in one piece. So, if we see the virus really recede and ability to treat it or get a vaccine come along relatively soon, I think we're going to be more of a U shape. But if not, it could be a long, bumpy recovery ahead.
Do you see, I guess the question too is, when we emerge, are people going to go right back to, how quickly will people go back to restaurants? Especially, I'm curious about your take on like retail. I mean, how many of those, retail chains or spaces are going to come back at all? And how many of them are just now going to be either virtual or vacant?
Yeah, it's a great question. I think that it's not going to be like a light switch. I don't think people are just going to immediately go back to doing activities that they were doing before. I mean, I think it's going to take a while for movie theaters to kind of come back. It's going to take a while certainly for any type of professional sports with fans. It's, that's going to probably be the last thing to come back. It's going to be a while before, what are the impacts on business travel going to be? I mean, we're going to probably, do less travel in the future, even when we do have a vaccine. And as far as those retail shops, the U.S. is literally the most over-retailed country in the world. I mean, we've got more retail per square foot per capita than any other country in the world, and we have and in return, we've got the lowest sales per square foot in the world as far as retail goes, storefront retail. So I think there's going to be, this trend was coming, and I think this pandemic is going to accelerate certain trends, and that's one of them I think that'll come out of this, is that there'll be a lot of retail out there store-wise that never comes back.
Interesting. Well, I mean, looking at it from a sort of a business perspective, and maybe your take on what's going on at Walker Dunlop, what are some of the permanent changes that like from the work from home situations to any other virtual applications that you guys are doing right now? How much of that is going to be permanent, and how much of that is just just temporary?
It's a great question, and I don't know that we know how it's going to play out. I know we're planning on opening certain offices up starting June 15th with very strict protocols in place in terms of wearing masks and other hygiene protocols and number of people allowed in the office at one time. Our company's has a policy that if you don't feel comfortable going back into the office physically, you don't have to, and that's for now an indefinite type of thing. And so it'll be interesting. Again, office leases are longer term leases, so whether this in the future changes how we office as a company is to be determined. I think you're going to definitely see a trend away from the recent trend of really dense kind of creative office workspace. And models like WeWork they're going to have to completely change the way they do it, which is based on a real dense model. So those trends will be interesting. We've been using, like everyone else, Zoom technology for meetings. So I think there'll probably be less travel and more widespread use of those technology tools that we really never used before. At least I never.
Yeah. Well, I'm curious too. I mean, you mentioned the sort of office configuration. I mean, to your point, it seems like just from my perspective on the outside that, so much of the office sector especially has gone to more of the open concept over the last, decade or so. And now to your point, I mean, I don't know how you sort of turn back the dial on that and go back to everyone having closed off, offices everywhere.
Yeah, well, I was listening to a webinar, when kind of discussing this topic, and the presenter kind of brought up, right now offices typically are designed 80% for individual workspace and 20% for group space. And maybe the model in the future is the opposite. Maybe it'll be 80%, maybe the office becomes a place where you just come in occasionally to meet with colleagues, but you primarily work individually from home or more often from home. And so you create larger shared spaces and less dense kind of individual workstations. So I think it's just, we'll see how it evolves, but I think it'll be different than what it was before.
That's interesting. Okay. So maybe, outside the industry, what do you think that, are there any actions that you think that government can take right now, whether it's federal, state, local, to help stabilize or boost the recovery of the market?
Well, I think, it's always easy to throw stones at politicians, but I think so far the response has been good. I mean, I think the passage of we've had multiple stimulus or kind of bills that worked their way through Congress, and then the last being the CARES Act, which was a $2.2 trillion package, and I think that's really helped stabilize finances for the 40+ million unemployed out there. And then the support it's given to other industries. And I think the other big piece that probably gets less press is what the Fed has been doing. And they've been leveraging an allocation from Treasury and deploying that in financial markets in a way that really has helped stabilize financial markets. And so far, those two things have really done their job. It'll be interesting to see. I think obviously the House passed a new $3 trillion bill that was kind of a grab bag of all kinds of different things, and I think that I think the prudent response is, let's see how this huge influx of money helps the economy, and then see what works and what doesn't work. There's going to have to be another bill. There's no question about it, but I don't think we need to rush one out when the money is still working its way through the system. But they're going to need to do something, because we're not going to be suddenly back to where we were in February in another 2 months.
That's true. Good point. So looking at the at commercial mortgage bankers specifically, what would be your advice or your take on how they can survive? Aside from what the government's going to do. And sort of larger long-term trends. What can commercial mortgage lenders do right now to not just survive the next few months, but thrive?
Well, I think it's it's still a relationship business, and even though we're all remote, really staying in front of your lending partners and and also your borrowers, and being there to bridge those two parties now more than ever, I think is an essential role for those of us in this business. And there's going to be things change every day, and in this current environment. And so being in front of your lender partners, being in front of your clients, our role is more valuable as mortgage bankers now than it's ever been in these uncertain times. And I know that, our partners really appreciate the role we play in this current environment.
Got it. Yeah, yeah. And to your point about the relationship side of the business, I just know just from watching our commercial events over the last 15 plus years or so, you really get the sense there's one constant, and it is the importance of that face-to-face interaction and networking. And so I'm curious. I mean, obviously, right now, networking consists of basically this right here, over a Zoom or go to meeting. Or something similar like that. What's your take on sort of the current and the future of networking in the commercial space in particular? I mean, is it going to be this for a long period of time, you think, or are we going to get back to sort of a face-to-face function before too long?
I think we'll get back. I think it'll be a hybrid. I mean, I think, in my opinion, I think this remote type of Zooming, if you will, I think it's when you already have built a relationship over time and over years, this platform has been great to maintain that. However, I don't see this replacing face-to-face for developing new relationships in the industry, meeting with new players and developing the kind of the relationship capital that you need to grow a relationship to get to the point where you can just be remote only with it. So I don't see the in-person events going away at all. They may be different, but they'll be back because they're really important.
Yeah, well, I would think, to your point, that it's got to be even more critical for someone maybe younger in the business or newer in the business that doesn't have that, book of business built up already. Like you said, I mean, they don't have maybe, a large amount of clients to, maintain the business. They're still building their business. And so that face-to-face has got to be even more critical to them.
Absolutely. And that's why I don't think that'll go away. I mean, again, we're going to have to get to a point with the virus where, we can safely gather that way again. But I think people will be hungry to have that face-to-face interaction when we can have it safely.
Sure. So maybe not handshakes and hugs, more, fist bumps and elbow bumps.
Yeah, exactly.
All right. So let's switch gears here. I'm curious. I know that advocacy is a big issue for you, a big priority for you. I mean, you mentioned your poli-sci background. Same here. So I mean, this is a particular area of interest for you. I know. What would be your biggest message to your colleagues in the industry about the importance of advocacy right now, and maybe the biggest issue that maybe they don't know about?
Yeah, I mean, there's a lot going on, and there's going to be a lot at stake on the ballot in November, and frankly, there's a lot of activity flying around Sacramento right now in the state assembly and state senate that we've got to continue to monitor closely, and we're really lucky to have a great lobby team that we've got, and they do a great job of tracking bills and alerting us so we can alert our membership when we need to jump into action. And I think we partner really well with the National MBA as well. I mean, I think that partnership is growing, and we are we are, if not the largest, one of the largest state organizations in the country. So we have a leading role in being on the front lines, so we're used to it, and I think we're well equipped to do it. I think you've got a number of things looming. Certainly near the top of the list as far as the ballot goes is the split roll measure, and the challenge is, I think, the proponents of carving commercial properties out of the Prop 13 protections.
Well, and maybe if I can interrupt, if you want to describe, just for those in the audience that don't maybe understand, when you say split roll, it's sort of shorthand in the commercial side.
Yeah, exactly. So this proposition would, right now, Prop 13 passed in the 1970s, protects all property owners from increases in their property taxes. It's limited to 2% a year. And the proponents of splitting the tax roll, so to speak, they want to carve commercial real estate properties out of those Prop 13 protections and allow county assessors to reassess commercial properties at market every 3 years. And so they believe that they can raise an additional $12 billion a year in taxes. And I'm concerned that this pandemic hitting and all the economic issues that we're going through as a state is hopefully not going to get people to support this bill, because our small businesses have just taken it in the teeth, and a lot of commercial property owners are basically small businesses themselves, and that type of tax increase on an already very burdened business environment in this state would just be devastating to small businesses and consumers. So hopefully we can continue to drive that message. I think it's an important one, and I know it's one that our industry's clients are very focused on.
Yeah, well, and even beyond, I mean, we talk about within the industry about the effect on businesses and property owners and all that, but you mentioned consumers there. I think that sort of flies under the radar sometimes. And anyone who's ever run a business or been a part of a business in any significant way understands that they don't pay those taxes. They're going to end up, that tax will end up getting passed on to the consumer in the end in some way, shape, or form. And so when you go to the ballot and say, well, I want to stick it to these big businesses and raise more money from them, oftentimes I think a lot of consumers don't realize that they will end up paying a lot of that tax.
Oh, 100%. I mean, we already pay more for most of our goods and services in this state because of the tax and regulatory burden that we've got, and to add more to that is only going to increase those costs because property owners are going to have to pass it along in the form of higher rent, and then businesses are going to have to pass on the higher rent costs on to the cost of their goods sold to the public. So it's not just some big faceless evil corporation somewhere that's just going to write a check and everything else stays the same. And I think people need to understand that.
Yeah, absolutely. All right, so I know we're short on time here, so I got one more question. And I mentioned at the outset that you're just about done with your tenure as California MBA Chairman. So looking back now, you've been on the board for a number of years now and been chair for a year. What's your biggest accomplishment, or maybe the biggest issue that you feel like we've worked on this last year?
Well, I mean, I think that we've done a lot of really good work on the advocacy side, and so I would point to that primarily. I think we've got a really great, diverse, dedicated membership on the board. And it's a great team, and it was a real honor and privilege to lead the board this year. So I think we've done a lot of great work with advocacy. I think we've continued to build on the value that we deliver to our member companies. I think we continue to have a higher profile statewide and nationally on issues of advocacy that are important to our industry. And so that's what I would say. I mean, obviously, being a passionate advocate for our business, it was obviously disappointing that we weren't able to do our legislative day in Sacramento and at the Capitol physically like we always have done in the past. I was really looking forward to that, being chair and being able to do that. But obviously, the old coronavirus got in the way of that. But in spite of that, I think we've had a really successful year on advocating for important issues for our industry.
Absolutely, couldn't agree more. All right, well, hey Jeff, appreciate the conversation. Great to at least see you, see your face, if not shake your hand. And if you've got any, if you want to follow our podcast here on Connect, you can check us out on either YouTube, or we're actually on Spotify now, or SoundCloud, or Apple Podcasts, and you can go back and check our archive of podcast episodes. We're actually now a weekly podcast, so make sure and check us out each Monday morning for a new episode. And with that, I'll close this out and we'll see you next week.